Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. And for this particular clip, I was kind of thinking this is why I started investing. If you go back, I'm in my early 20s, I just graduated college, and I got my job, and I'm looking around, I'm going, man, I don't make that much money. What I like to do is I don't want to work my entire life. So I was thinking, how can I store value? How can I increase my wealth? How can I grow my purchasing power? Those are all things that I was thinking about when I graduated college and started my first job. My first job was with Boeing. I was a manufacturing engineer at Boeing in Huntington Beach, California. So very high cost of living. This was in the early to mid 2000s. We were in that real estate boom, and everything there was very expensive. It was like $700,000-$800,000 for literally a little storage garage on a little piece of property. That's what the pricing was. And I wasn't making that much money. And it was going to take me many, many years of working very hard and saving lots of money to buy a shed on a 6,000 square foot property, literally. So what I dove into is I wanted to look at how I could either store value or grow wealth or purchasing power, however you want to say it. So I created this presentation. It's called Storing Value. And I'm going to show you some things that when I was back in my early 20s, I looked at it and I said, this is crazy. This is absolutely crazy. And I'm going to show you why I think some of these things is crazy. Because one, we know that inflation happens. We know that inflation is just the increase in the money supply. And if you try saving and storing value in dollars, that value erodes over time, and nobody would want to do that. And I'm going to show you some things that kind of opened my eyes when I was younger, trying to figure this stuff out. So I call this presentation Storing Value. It's not a super long one presentation. So this is kind of how I look at things. I think that value is time. And time's the most valuable thing that a person can have, especially if you're young, because you can do whatever the heck you want. You've got good health, you've got lots of time on your side, and value is time, and time is value. So your time is valuable, and somehow if people want to store wealth or value, which is really you're just storing your time, you need to be educated. You need to figure out how to do it. This isn't something that you can just store in dollars, because dollars has inflation, and inflation erodes the purchasing power of that money. So the tough part is storing value over time. And where and how do you store value over time is the question. How do you do it? This is one of the most difficult questions to answer, but let's look at some data. I just want to show you some data very quick on some things that kind of could be eye-opening for some people. So the general paradigm is go get yourself an S&P 500 index, just dump a bunch of money in it, cost average in, and you're going to make money. So the returns for something like the S&P 500, which is seen in the orange there, is in a 30-year time frame. The S&P 500 returned 10%. Don't worry about the investor return. Just worry about that 10%-ish return over 30 years. That's what the S&P 500. So everybody that says just get yourself an S&P 500 index, dump a bunch of money in it, and your return on average for the past 30 years, which was a favorable environment, I would say, for the S&P 500, is about 10%. Now, if you look at this is from Shadow Stats. This is the consumer inflation. This is based off of 1980 calculations, which means we took out all the hedonic adjustments and all that other, we'll call it favorable adjustments for the government or Federal Reserve. The blue line is what I'm looking at. What does that say? It says consumer inflation since about 2001 has averaged 10% per year. Now, let's get this straight. I go and I make money. I want to store my valuable time so I can use it in the future and try to gain some sort of purchasing power gains. If consumer inflation is really 10%, and the S&P 500 returns 10%, but you have to pay taxes when you take it out of 15%, you're actually losing money. You're losing purchasing power. You'd be better off just spending the money right when you got it than you would be trying to save up and beat this consumer inflation number that's 1980 based. So I did research, and I over the years I've heard these billionaires make these statements, and the billionaires make statements and they say, they look at investments as stores of value. They look at wealth as how do I preserve my wealth? How do I grow my wealth? And how can I get value? Eric Sprott, I'd hear him say in his weekly interviews, he would say something on the lines of, he's buying silver in the ground for a company for less than $5 an ounce. Some of it is even less. It could be like $5 an ounce for gold. I was like, oh my God, that's ridiculous. So he's in a lot of exploration type companies. Those companies, they dig, they find something, they prove up the reserves, and it's creating value for shareholders. So if you are well connected and you're good enough at identifying some of these exploration companies, these guys come in with millions of dollars or billions, depending on how much they put into that position, and they're buying value in the ground where the management team proves up that value. John Goff would say that he invests in oil because he thinks it is a good store of value. And he would come out and say that directly in some of his interviews that he had with companies. And that's important because billionaires are looking at this and saying, how can I obtain value and what can management do to increase the value for its shareholders? They're looking at it from a way of preserving wealth and from a way of either growing value or protecting the value they have. So they're actively looking at this, and they're looking at it from a value perspective. They're saying in history, oil is extremely cheap. And what you saw with John Goff and his company Contango is he's out there buying a whole bunch of properties that have oil in the ground. So he's viewing it as a store of wealth. It's a store of wealth that is in the ground that needs to be extracted over time. And Eric Sprott, he would say the same thing as John Goff. These guys are looking at it as a store of value. It's in the ground. We've got it, and I can buy it for a very cheap price. All we have to do is extract it out of the ground. That is where the value creation is for the shareholders. So that's one thing I think a lot of people don't view or look at it like the billionaires do. I've changed my mindset to look at it like the billionaires do. I'm looking at it from the perspective that I have to invest in order to maintain my purchasing power and to grow it. If I have to do that, where are the best opportunities in the world? Where we have the most undervalued opportunities? And I'm going to go over in some other clips what those opportunities are using ratios and other ways to identify value. And one of John Goff's opinions, I was kind of going through that in an article, and he said, before the world does not need any more oil, we will suffer a shortage, he predicts. The world may be burning nearly 10% less oil than the pre-pandemic 101 million barrels per day, but he says, don't mistake COVID-related weakness for a secular shift. That right there is a huge statement. Don't mistake COVID-related weakness for a secular shift. Goff reasons that electric vehicles are just a blip. I think there's tremendous pent-up consumer demand. People are really tired, he says, adding that workers want to get back to their offices. Oil and gas is going to come back with a vengeance. Already in Brazil, petroleum demand is above pre-coronavirus levels. So that's what he thinks about the demand coming back with vengeance after this COVID crash scare. And storing value is important for anyone wanting to delay purchasing something today and saving for tomorrow. The only way to identify value is through ratios, and that's relative value of an asset versus other assets. So what we want to do is we want to identify value and sift through all of the different assets that we can purchase using ratios. And I'm going to do that for you guys in the next video clip. Pricing assets against assets removes the dollar out of the equation and comparing asset valuations ratios to history. So what that is I'm saying of all the assets in the world, we need to compare those assets to each other, find what's cheap, and invest in what's cheap. We can't use the dollar as a measuring stick because the dollar isn't a stable form of measuring. So the measuring is doing this on you. Deflation, inflation, fluctuation in prices. We don't know how this money's flooding into the system and how it's changing the pricing of each asset. So we can't say that an asset goes up 5%, that was good or bad. If an asset goes up 5% and everything else goes down 30%, you just killed it. Like, you did an incredible job. Even just holding your ground at 0% when everything else crashes around you is a win. So it's all relative. It's all relative. Sometimes when everything goes up, we want to be in the asset that goes up the most. If everything's crashing, we want to be in the asset that goes down the least. It's a win-win if you can buy more of other assets with the asset that you're in. That is the entire purpose of doing ratio investing and increasing your purchasing power gains as an investor. If you guys like this content, give me a thumbs up. Look for my ratio analysis videos coming out right after this. And thank you for listening. This is Finding Value.